Hey, I'm Brian Riley with the Riley Smith team at 𝘿𝙄𝘼𝙉𝙀 Realty. I'm excited to have Diane Scavolone with me from First National Bank. First of all, Diane, thank you for joining me.
Thanks, Brian. I'm so excited to be here with you. This is awesome.
Absolutely. Always a pleasure. You know, we started talking the other day because I'm doing a video series on Instagram, 10 ways to buy a house when you have a home to sell. Everybody knows right now, that first of all, there's no inventory, right? And everybody that I'm talking to that's, getting ready to sell or would like to sell and move, whether it's to upsize, downsize, relocate, whatever, the big thing that I keep hearing is, well, where would we go? So, and you work for First National Bank and you guys offer some really awesome products. In addition, let me back up. In addition to you being just a great friend and a great person and somebody that I trust and enjoy dealing with, you work for First National Bank and you guys offer a lot of products that, the other big banks, I don't see them executing successfully anyway. So I think you guys have had success with certain products. And a lot of the brokers, I don't even see offering these products currently, whether it's, with new guidelines that might have something to do with COVID or what the case is there. So we started talking about that the other day. What are some of those products? Like, what are some of the popular products that you see First National Bank offering and you see people using that are helping right now?
Yeah, I've done this a handful of times in the last couple months. If you've ever heard of the term bridge loan, and this is truly like a temporary loan, and it is used for whenever you own a house, and let's say you have a significant amount of I can't talk. Speaking of inventory, I wanted to say that word.
Everybody wants to talk about inventory.
Right. You have a significant amount of equity in the property, or at least just enough that you can use for the down payment and closing costs on the new house. Okay. But you don't have a big savings account. All of your assets are really in your house. And so this bridge loan is used as a temporary vehicle to access that money. So what we do is, and there's other lenders that might have this. I'm going to speak a little bit in generalities about how it works. And then, if people have questions, we could talk about their particular situation. But usually with a bridge loan, we're able to take a certain percentage. You can have a certain percentage of your home's value loaned against. Okay, so let's just say you can go up to maybe 80 or 85% of that house's value. You can have a loan against it. And so let's say that 50% is your current mortgage, and then you might have an extra 30% like left over that you would be using for the equity in the house. Okay, so that would be the loan that we would take out. So that money could then be used for the down payment and the closing costs on the new place. And so you legitimately get that money. We close on that just like we were going to do a refinance. We do the way that we handle it is we do kind of like a drive-by or an appraised value model of what the equity is in that house, what the value is. And then you would get a check, for that amount of money. And then there's different terms and conditions, other lenders may have, but generally speaking, it's like a balloon loan. So you might have payments, interest-only payments for only like 12 months. And then at the end of that 12 months, it balloons, and it's expected that you would then pay that loan off, which you would do because you're going to sell that house anyway. So, that would just go away. So it's nice that having an interest-only type of payment, then it's not like a big additional cost to access that equity for yourself. So that's been, worked out really well. Now people have to be able to qualify, with their current mortgage, with the new mortgage, like this new bridge loan mortgage, and then they would have to also be able to qualify for the new house. So, it has to work well for people that don't have a whole bunch of debt, to be able to access these type of funds.
Gotcha.
So it's been, you know, it works out really well. You have to have pretty decent credit. It doesn't have to be perfect. But you know, you got to figure decent credit scores, and we can only lend against like your primary residence is the way that we're handling it. You know, to do that actual bridge loan, there's just a small processing fee. And then there's no like prepayment penalty or anything like that that people have to worry about. You know, hey, well, if I pay this bridge loan off in 3 months, are you going to charge me? No, the point is to get it out of here.
Oh, sure. Yeah.
Yeah. And I'm trying to think if there's anything else. I'm looking at my notes here real quick.
Yeah.
Yeah, I mean, and then a lot of times what happens is and this is where you really want to work with somebody like me that kind of like keeps track of all the details, because you know, from the lender's perspective, we have to be able to juggle the guidelines for both loan products. You know, like make sure you qualify and hit all the bells and whistles for the bridge loan. And then is this going to be an acceptable product to use for when you do your purchase loan too? Because not only do you have to qualify carrying both loans, sometimes, I mean, you are going to have some reserves. And what that means is, like, let's just say, you know, 6 months of your current mortgage payment, you know, so you might have, say your current mortgage payment is, I'll just make math easy. Let's say your current mortgage is $1,000 a month. And then your new house payment is going to be like $3,000 a month. So if we add that together, that's like $4,000. So, you know, sometimes 6 months, sometimes 2 months, sometimes 12 months of that total housing expense has to show that you have reserves. So in case of an emergency, you want to be able to show, and it can be retirement money, you know, it doesn't have to be liquid, just being able to show that, hey, if something crazy happens, I have backup cash to help with paying all this. Yeah.
So it's not really so it's not for everybody, it sounds like, first of all.
No.
And it, you know, not really intended to be like a, you know, low credit score, no money down type of like easy way out. It sounds like you really, a lot of things have to align with the buyer, or in this case, buyer and seller, with that person's credit and their assets. And obviously they have to have a house currently with a significant amount of equity. So there's a lot of things that need to align there. And then I'm kind of, so I'll be completely honest, I'm in the middle of, like, honestly, there's things about the bridge loans that I don't know. So I have my own questions. And then there's things, of course, that I do know, but I want to make sure that we're communicating to everybody else. So I'm somewhere in the middle of being, you know, genuinely curious about some of these things, and just wanting to make sure that we're, you know, giving everybody the information that they would need so they can make the best decision possible for them. Because at the end of the day, I mean, that's what we do, right? That's our job. Yeah. So with the bridge loan, you are paying off your current mortgage. No. No.
You can leave, that's it. Yeah, you leave, that's it. You're basically just getting like a second mortgage.
Gotcha.
And also keep this in mind too. That's a really good point, Brian. You're so smart. If you have a second mortgage, it's not a dead end. Like, we would pay off a second, because the bridge loan, it can't be going to like third lien position. So we would say you have a $20,000 second mortgage, but you have maybe another $50,000 in equity. We would just make your second mortgage, or that bridge loan, a $70,000 loan amount. You know, so then you would be paying interest only on just that balance.
Makes sense. Okay.
Yeah.
So then I guess the question that a lot of people are going to have, what is the difference between a bridge loan and a home equity loan?
Yeah, very good question. All right. A home equity loan is more of like permanent financing. It would be, you know, and it would be something where you still have to have some equity. Generally speaking, most lenders are going to probably not let you take out more equity than maybe 80-85% of your current value, maybe 90%. Some of the more risky type lenders, they might let you go to 100%, but your interest rate, you know, you're going to pay for that. There might be points, or there might be a, you know, probably more than likely a higher interest rate. And that's something that you think you're going to keep for a while. Generally speaking, home equity loans don't have any fees. And so where I recommend that type of a product is, especially for people that would prefer to pay cash. You know, I know there's a lot of, you know, people that are maybe retired, a lot of people that are like just maybe downsizing, will be taking, they don't want to have a mortgage, but they know they have a ton of equity in their current house, and they just want to buy the next place. That's a home equity loan is the perfect way to do that. And then sometimes people, you know, they could even use their current home equity loan for the down payment and closing costs, and not even have to buy a bridge, you know, do a bridge loan if they already have a home equity. Because some people might have one already that's just sitting there, like in case of an emergency. You know, and I tell people, check your records. You may have signed up for something and you used it to like remodel the kitchen 10 years ago, and then you forget that, oh
Right.
yeah, I do have a $50,000 line that has no balance on it. I could use that, you know? So it's kind of like, and that's where having conversation with people like us early in the process. I mean, you know, Brian, we'll talk to people, they might not be buying for 6 months, a year. We'll give
Right.
them all the kind of nuts and bolts of what they need to do so that they can plan ahead, you know? So it's good to check into doing something like that. But yeah, does that help? Does that answer your question?
Yeah, I think so. And that's the important thing too. We use the term home equity loan as kind of like an interchangeable term, but in reality, what we're usually talking about is a home equity line of credit. So it's a, would you call that, again, I'm not a banker, but I don't know if you would call that a revolving line of credit, but it's always there.
Right. Yeah.
So like you said,
No,
some might even already have that.
yeah. And that's exactly, that is such a good point, because home equity loan, I always tell people, it's kind of like you have a big credit card laying on your house, and you can tap into it and use as you want. If you could still have a home equity loan, but it might be like a fixed term. Like some people might get one and it's like, oh, it's a 10-year fixed, you know, at a certain rate, because they don't, like, usually home equity loans don't have a fixed rate. It's a variable rate that's going to fluctuate with what the market is doing, with like maybe a margin or something,
Right.
you know, up or down a little bit of a additional fee on top of the rate. But yeah, so make sure, exactly, you want to make sure if you are looking at your home equity loan, is it an installment loan or is it a revolving loan? Yeah.
Got it. So it's like a credit card. So you could have, let's just say, $100,000 house, and they'll let you borrow up to 80% of that. So you have an $80,000 line of credit, but you're not necessarily using that.
Right.
So that's kind of like your what they call with a credit card, your limit.
Right.
You might pull $5,000 from that to go and fix a furnace, and then you're only making payments on the 5,000. The other 75 is like untapped potential loan, I guess you could say.
Yeah. Yeah. And
Okay.
it's interesting because people don't realize how much equity that they have in their houses, you know, especially if they've owned it for a while. And
Right.
it's so funny. I don't know if you've noticed this in Pittsburgh. Pittsburghers don't tend to think, oh my gosh, my house isn't worth that much, or I would never spend $500,000 house in Lawrenceville. But then we have people that are relocating to the area that they think $500,000 for a house in Lawrenceville is a steal.
Right.
So, you know, like that's just another aside about, you know, values and stuff. So, you know, if you're not sure, folks, about what your value is in your house, reach out to Brian, because he can let you know, especially if you're not, like, you know, in tune with what's really happening with your neighbors and if they're selling and not. Yeah,
Right.
it's good.
And right now, with the way the market is, even if you were in tune with it last year,
Yeah.
or year before, it might be a big difference right now.
Yeah.
In what that number actually is that your home is worth. That's definitely true.
Definitely.
We're even seeing, I mean, it could probably spin into a whole nother conversation here, but what you just described with people coming from out of town and looking at areas like Lawrenceville, we also see that on a smaller scale, like somebody who lives in the suburbs of, you know, let's say the North Hills, looking in South Butler or Mars or Economy or Harmony Township or Jackson Township or, any Peters Township, any of the outskirts, right kind of outside Allegheny County. Look at what you can get there with taxes and everything else. And it's the same thing. So there may be people that have lived in that area that have always thought, my house will never be worth more than 100,000. And now it's worth 200,000 because to somebody coming from North Allegheny, that's a steal. Right. So,
right.
Again, that could be a whole nother conversation. But you bring up a good point. We can help people learn like what the market is doing and what their house is worth. But if they're really going to get a loan, or if they're going to sell their house and the buyer's using a loan, they're going to use an appraisal. The bank's going to order an appraisal. What are you seeing right now? And this might be related to bridge loans and home equity loans, or even just in purchases, because obviously that's still your specialty and your bread and butter. What are you seeing right now with appraisals in this market?
I really haven't seen very many issues. I mean,
Okay.
It's been pretty, it's been coming in pretty good with what the sales prices are. Now, I will say, in terms of the refinances, it's kind of interesting because I think, appraisers are so busy right now. So, we kind of, you as the agents, you kind of help a lot because here is on a piece of paper what someone is willing to pay for this house,
Right.
So it kind of gives them a guideline, so to speak, of, okay, this is what we're shooting for. On a refinance, sometimes that can be a little different. And back in the day when I did this, been doing mortgage loans a long time, and it used to be, we would tell the appraiser, here's what we're looking for in terms of the value, and they're looking to get cash out or something like that. Now we are not allowed. I mean, I'm not even allowed to have a conversation with an appraiser, where I used to call them and say, hey, do you think this house would be worth this much? They want to do a cash out refi.
Right.
We can't do that now. So it's taking a long time to answer your question, but basically, if I am seeing any issues with values not coming in, it's sometimes on people refinancing,
On the
and they
refinance
might
side.
be trying to take out a little bit more than they can with doing their transaction, because it's funny, the whole mindset thing. Well, my neighbor, he got 500,000 for his house, and mine is just like that one, and then their value comes in at like 475. And it's like, well, yeah, your neighbor had a finished walkout basement and updated their kitchen, and
Sure.
you don't have that. So sometimes that comes up as a little bit of an issue, but even still, not a lot. I would say it's a very small percentage. So that has been a good thing. Yeah.
Good. Okay. Well, so that's the good thing for the people out there that own houses that are, they need to sell them, whether before or after they buy the new house. Obviously, that's why we're having this conversation. But, it sounds like across the board, home values are up and inventory's down, and it's a great time to sell. And there's options out there to help you with buying the next house, so you know where to go. And we're here to help you make those decisions, right?
Yeah, absolutely. For sure.
Awesome. Well, that's really all I got. You've been very helpful as usual, answering my
Good.
questions on bridge loans and home equity loans, of course, appraisals a little bit. So
Okay.
do you want to tell everybody the best way to get a hold of you if they do have specific questions on any of these loans?
Oh yeah, for sure. Probably, the best way is my cell phone. I think I have it with me all the time. It's 412-657-1431 is my cell. And then email is also great. Is I don't know if you want me to spell it all out for you.
Go ahead.
It's
Yeah.
𝘿𝙄𝘼𝙉𝙄@fncorp.com. So that's SCABILLONI and then D. So 𝘿𝙄𝘼-corp.com. Yeah.
Awesome.
So
Thank you. Well, I'm gonna post this on Facebook and Instagram and YouTube and everywhere else. That's why I figure it's easier for you to just spell it out so nothing gets missed in comments or descriptions.
Great.
But hopefully we'll post this video up and some people will get some value out of it and be able to, start looking at options that they didn't know they had, and help them again with upsizing, downsizing, relocating, whatever they need to do. It's a great time to move, right?
Yeah, absolutely. And to have a good team behind you too. There's so many things going on, so many irons in the fire, that you want to have people that are, going to be on your side managing this with you.
Absolutely. Could not agree more. So, all right, Diane. Well, thank you so much for jumping on here with me and let me pick your brain about bridge loans and home equity loans. So we'll be doing this again at sometime in the future soon, I'm sure. So
Okay, great.
Until then, I guess.
All right. Thank you.